Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and we're going to compare prior bear markets, but this time, rather than using 69K as the peak in November, we're just going to go through an exercise of what it looks like if we use 64K as the peak measured back in April of 2021. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and remember to check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. You'll get access to this chart as well as a whole bunch of other charts, including risk analysis, logarithmic regression, on-chain analysis, derivatives data, social metrics, and more. We're going to go ahead and wrap up that sale on July 13th. Okay, so you have a few more days to lock in that lower rate. Now, the reason we're making this video, because, we actually just made this video a few days ago, maybe just even like 2 days ago. And the reason I'm making this one is because after I made that video, a lot of people ask, well, what if you measure it or what if you look at the ROI from the peak as measured from April rather than November? And one of the reasons people have asked this is because we've talked about the idea that you could argue that April was a more technical top than November. Okay, I mean, technically, of course, it was a double peak, but from the perspective of a lot of other metrics, a lot of macro metrics that have been developed over the years, the risk metric that I use, things like the MVRVZ score, even like, the pi cycle top, a lot of other indicators really suggested that 64K was a more important peak than 69K from sort of like a euphoria, a mania perspective. And so why not measure the bear market as, from that point? So we're going to do that. And some of the reasons include things like, the running 1 year ROI. We know that normally it bottoms about 1 year after a price peak. Okay, so that's probably one of the biggest like sort of counter arguments to all this stuff. Like, normally if you were to use 64K as the peak, then a year later, you would have suspected we would have been further down on this, but we weren't. And so that's why I think while it is useful to sort of think about this stuff as measured from 64K, I think it's worth keeping an open mind about what might happen later on this year if in fact it's that 1 year after the actual peak at 69K. But what I wanted to do is we're just going to go through what it looks like if you measure it from April rather than November. Okay, so this is what it's measured from November, the green line. As measured from April, it looks like this. Okay, so from a time perspective, the bear market as measured from April has actually lasted longer than any of the prior bear markets. Okay, so if you measure it from April rather than November, you can see that it's lasted longer. If you measure it from November, you can see that the ROI from the peak is actually the same as it was in 2018 after this amount of days after the prior peak. And so I think it's really worth following it from November to see if this thing continues to play out. Even in 2018, at this point, we had sort of a relief rally that took us up for a bit. As measured from April, you can see we're well past this sort of time frame. But there was a move down at the end of these bear markets, and in 2 cycles ago, you can see, or sorry, 1 cycle ago, you can see it had that leg down over here that took us all the way down to about 0.9, or I should say 0.16, I believe is the furthest, and went down about 84% down. And then the bear market before that went down just a bit more. So while from a time perspective, as measured from 64K, the bear market has gone longer, from an ROI perspective, we haven't dropped what we saw as bad as it was back then. And, switching back to November, you can kind of see it looks like it's a bit more on track with this than it does in April. Okay, but it's at least something to consider. And then from that point, going back to November and then going all the way to the peak or to the next peak, you can see what it looks like for Bitcoin as measured by November. And if we switch this over to April, this is what it looks like. So right, like it's much further along if you add half a year, of course. So I know a lot of people asked for this, and I just wanted to say it was a good idea. Why don't we go ahead and add it on here? And now at least you can see kind of how it compares to, versus November and April. So one of the things I think it would probably bring up, and this is a question I see in the comments a lot, is, well, what about diminishing losses in crypto, right? Would you expect diminishing losses? Remember, Bitcoin could drop 80% from its all-time high and still technically be diminished losses. a 14K Bitcoin, while as awful as it sounds, would still be diminishing losses because that's about an 80% drop from the all-time high. Whereas last cycle, again, it dropped closer to like 84%. So don't assume that the 70, I think so far the furthest we went down was like 74, 75%. And yes, technically that is diminishing losses. I'm not so sure if going from 84 to 74, if that jump is reasonable, considering how far out we still are from, say, the next halving, and still how far we are out likely from the Fed pivoting. But we'll continue to follow these as measured from April and as measured from November. Certainly by the end of the year, we'll continue tracking this and see if we get that final leg down, and if we do, as measured from November, and if you see this play out in a very similar way, where it sort of just chops around for a while and then has one more move to the downside sometime by the end of this year, early next year, it might be time to wake up and gear up for the next market cycle. If on the other hand, we're able to hold 17.5 for many months to come, and the Fed pivots, then we'll have to plan accordingly based on that. And then from whenever we do get a market cycle peak, even if it's in hindsight, then we'll have to start measuring the next market cycle ROI as measured from the bottom. But anyways, I hope you guys enjoyed the content, and hopefully the people that asked for this analysis as measured from April got what they were looking for. Remember to subscribe to the channel. If you're not subscribed, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We're going to go ahead and wrap that up on July 13th. All right, I'll see you guys next time. Bye.